Recent geopolitical and economic developments have sparked intense debate among analysts, particularly regarding trade relationships in the Western Hemisphere. Since the beginning of the new U.S. administration, policymakers have placed strong emphasis on strengthening regional influence across North and South America. This strategy includes deeper engagement with Latin American economies, financial cooperation with struggling regional governments, and efforts to secure supply chains for critical resources such as energy, minerals, and manufacturing inputs. Many analysts believe these moves are part of a broader attempt to reduce strategic dependence on rival global powers while maintaining economic influence in the region. Canada has recently emerged as a key focus in these discussions. As one of the United States' largest trading partners and a major supplier of natural resources, Canada plays a crucial role in North American economic stability. However, shifts in Canadian trade policy and investment diversification strategies have drawn increasing attention in Washington. Some reports suggest Canada may be exploring expanded trade relationships with multiple global partners, including China, particularly in areas such as electric vehicle supply chains and battery manufacturing. If such partnerships expand, they could potentially increase competition in the global automotive and clean energy sectors. China has become one of the largest producers of electric vehicles and battery technologies. In many global markets, Chinese EV manufacturers have gained competitiveness due to cost efficiency and rapid scaling of production. If Canadian markets open further to international EV manufacturers, it could introduce stronger price competition that may affect North American automakers. The automotive sector remains highly interconnected between the United States and Canada. Canadian markets represent a significant portion of U.S. auto exports, and supply chains often cross borders multiple times during production. Changes in trade policies, tariffs, or regulatory frameworks could influence employment levels and manufacturing investments across both countries. Tariffs have historically been used as negotiation tools in international trade disputes. While tariffs can protect domestic industries, they may also increase costs for consumers and manufacturers by disrupting supply chains. Economists generally emphasize that tariff escalation can create ripple effects throughout integrated economies such as North America. Energy trade is another critical area connecting the United States and Canada. Canada is currently one of the largest foreign suppliers of crude oil to the United States, particularly heavy crude that is compatible with certain U.S. refinery systems. Changes in trade restrictions or pricing structures could influence fuel costs, production economics, and energy security strategies across both nations. If trade barriers were to increase significantly, Canada could potentially diversify its export destinations further into global markets, including Asia. Infrastructure projects such as pipeline expansions and export terminals have already been developed to support broader international energy distribution. However, such shifts would likely require substantial investment and long-term planning. Beyond energy, Canada is also a major exporter of steel and aluminum to the United States. These metals are essential for construction, infrastructure development, automotive manufacturing, and technology production. Increased tariffs or supply disruptions could raise costs for large-scale industrial projects, including advanced manufacturing and data center construction. The rapid expansion of artificial intelligence infrastructure has created significant demand for construction materials and specialized manufacturing components. Industry forecasts suggest that global data center investment could increase dramatically over the coming decade. Changes in commodity pricing or supply chains could influence the pace and cost of this technological expansion. At the same time, both the United States and Canada face internal economic challenges, including corporate debt pressures, interest rate fluctuations, and shifting global trade dynamics. Rising borrowing costs and supply chain volatility have contributed to increased financial stress for certain industries in recent years. From a broader geopolitical perspective, trade disputes between closely linked economies can create opportunities for alternative global suppliers. Countries with competitive manufacturing or resource extraction capabilities may benefit if traditional trade routes become more restricted. This reflects the interconnected nature of global supply chains, where policy decisions in one region often create ripple effects worldwide. Another trend attracting attention among investors is the growing interest in reserve diversification strategies, including increased gold purchases by central banks. Historically, gold has been viewed as a hedge against economic uncertainty and currency volatility. While gold prices have experienced strong long-term growth during certain periods, analysts emphasize that commodity markets remain cyclical and influenced by multiple economic factors. The international financial system continues to evolve as emerging markets, digital payment systems, and regional trade alliances reshape global commerce. Despite these changes, the US dollar remains the dominant global reserve currency due to its deep financial markets and widespread use in international trade. Looking ahead, the future of North American trade relationships will likely depend on balancing economic competitiveness, supply chain resilience, and geopolitical cooperation. Policy decisions made by major economies may influence not only regional markets, but also the structure of global trade for years to come. As global economic competition intensifies, investors, policymakers, and businesses will continue monitoring how trade agreements, technological innovation, and financial cooperation shape the next phase of international economic development. What are your thoughts on the evolving trade relationships between North America and global markets? Share your perspective in the comments below, and don't forget to like and subscribe for more discussions on global economics and geopolitics.